Ja, meine Damen und Herren, herzlich willkommen zum zweiten ESG Special. Diesmal wirklich mit einem sehr Nischenthema, aber sehr interessant für börsennotierte Gesellschaften. Es geht um Impact Share Buybacks als ESG-Instrument und ich freue mich wirklich sehr, dass wir hier eine sehr renommierte Bank gewinnen konnten, dieses Thema für uns zu erklären. Diejenigen, die schon einige Vorträge mitgemacht haben in den letzten, gestern und heute Tagen, wissen, dass die alle auf stumm geschaltet sind. Sie können aber ihre Fragen über den Chat stellen. Diese werde ich dann während des Vortrags oder am Ende entsprechend an die Audienz weiterleiten. Von daher fordern Sie unsere Referenten, das sind absolute Top-Profis, und challengen Sie mit Ihren Fragen. Jetzt wünsche ich Ihnen eine tolle Zeit. Frau Krüger, ich übergebe an Sie und bin sehr gespannt, was Sie uns zu berichten haben.
Klasse, vielen herzlichen Dank, Herr Diegelmann. Vielen herzlichen Dank an Sie, an Cometes, an den ER-Club, dass wir heute hier mit dabei sein können. Und herzlich willkommen natürlich auch an das Publikum und das anonyme Publikum da draußen, von dem ich hoffe, dass einige gar nicht anonym sind, sondern ich vielleicht noch kenne. Ich freue mich persönlich ganz besonders, wieder in dieser Runde dabei zu sein, nachdem ich im letzten Jahr ein Jahr ausgesetzt habe bei der ersten virtuellen Woche. Ich durfte viele Jahre vorher dabei sein in Frankfurt, auch auf dem Podium, und freue mich wirklich sehr, auch jetzt wieder den ER-Club und Cometes mit dieser Veranstaltung unterstützen zu können. Nicht das erste Mal für mich, aber das erste Mal für die BNP Paribas, und auch im Namen der BNP Paribas freue ich mich natürlich ganz besonders, dass wir das erste Mal den ER-Club bei dieser IR 22nd Virtual Week unterstützen dürfen. Und das passt auch sehr gut in unsere Aufstellung hier in Deutschland. Ich selber bin jetzt seit einem Jahr an Bord und bin begeistert, wie wir immer mehr auf der Investmentbanking-Seite hier in Deutschland präsent werden. Die Bank ist mittlerweile seit 75 Jahren hier vor Ort. Wir feiern dieses Jahr Jubiläum und hat sich in den letzten Jahren sehr auch dem Wachstum im Investmentbanking, insbesondere im Equities-Geschäft, verschrieben. Da gibt es unterschiedliche Puzzleteile, die so mehr und mehr ein Bild formen, unterschiedliche Puzzleteile im Hinblick auf Menschen, die zu uns gekommen sind in den letzten Monaten und Jahren. Das bin nicht nur ich, das sind viele andere Kollegen, wie zum Beispiel der Christoph Heuer, der von Goldman zu uns gekommen sind, und viele andere auf der Equity-Seite, der Andreas Bernsdorf, der schon seit einigen Jahren mit dabei ist. Wir haben im vergangenen Jahr 100% der Anteile von BNP Paribas Exane übernommen. Exane BNP Paribas, wie es zuvor hieß, heißt unser Equity Research House, gehört jetzt zu 100% zur BNP Paribas Gruppe. Wir sind dort seit vielen, vielen Jahren der Qualitätsführer im Research und im Sales, entsprechend der Excel-Umfragen. Wir haben mittlerweile auch, und das freut mich aus deutscher Perspektive natürlich ganz besonders, seit einigen Monaten ein Research-Team in Frankfurt vor Ort, werden in dem Kontext auch unser Research-Coverage deutlich verbreitern. Large Caps, die wir zum Teil heute schon covern, aber vor allem auch in Richtung Mid Caps werden wir dort viele Initiierungen in den nächsten Wochen und Monaten sehen, und einige haben wir tatsächlich auch in diesem Jahr schon gesehen. Der Ingo Schachel leitet das Team vor Ort und dürfte vielen aus dieser Community entsprechend auch bekannt sein. Also wollen wir natürlich auch die ER-Community auf anderem Umfeld, auf anderem Wege begleiten, und dazu gehören natürlich auch solche Informationsaustausche wie heute. In der Vergangenheit durfte ich immer das CFO-Panel moderieren. Jetzt bin ich bei einer der renommiertesten Banken im Bereich ESG. Renommiert, weil zum einen sehr früh dabei, seit über 10 Jahren schon mit einer aktiven Strategie auf ESG fokussiert, und wir versuchen in dem Bereich auch sehr innovativ zu sein und freuen uns heute eben, zwar vielleicht ein Nischenprodukt, aber ein innovatives Produkt vorzustellen, von dem wir überzeugt sind, dass es wahrscheinlich in einigen Monaten, spätestens Jahren, gar kein Nischenprodukt mehr ist. Nun aber genug der Vorrede. Ich würde jetzt in Englisch switchen und meine Co-Referenten heute vorstellen, und da wir ein europäisches Panel haben, würde ich dann auf Englisch weitermachen. So welcome of course also to my co-panelists. And I would like to start with a quick introduction of the panel so that everybody introduces him or herself very quickly so that the audience knows who's going to join us this afternoon before we head straight into the topic. And I would like to start with Sophie for a very quick introduction of yourself.
Okay, can you hear me?
Yes, we can.
Okay. Good afternoon, everyone. So my name is Sophie Palliez-Capian. I'm VP Corporate and Stakeholder Engagement at BIC, which means this is a very odd name and an unusual name or an unusual position. Actually, I'm in charge of investor relations and ESG reporting, and this is why I had to carry on and work on the ESG share buyback that we are going to cover today during this panel. So I'm based in Paris, and thank you for inviting me.
Thank you very much, Sophie. Carsten, would you like to introduce yourself, please?
Yeah, thank you, Silke. Happy to. So good afternoon to everybody. My name is Carsten Keller. I'm a managing director at BNP Paribas. I recently joined the company. My background is investment banking in ECM, DCM, so a capital markets background. But I also worked as a head of IR for a software company in southern Germany, TeamViewer AG, for the last 2 years. My responsibility at BNP is to look at exactly these things, so share buybacks, and help customers like yourself to execute these buybacks in various formats.
So we have actually two from the IR community, or at least ex-IR community, on board, and then we have the voice from the off, Bénédicte, unfortunately without camera, as we have technical problems, but everybody feel free to Google Bénédicte Thibord, then you will have a picture of her. So Bénédicte, would you like to introduce yourself?
Guten Tag, I'm Bénédicte Thibord. I'm the head of corporate equity in Europe at the BNP Paribas Exane, and it's a pleasure to be with you. Thanks for the invitation.
Thanks, Bénédicte. And quickly, for those who do not know me, Silke Krüger. I just joined BNP Paribas 1 year ago as head of large and mid-cap corporate advisory. This is a strategic investment banking advisory, so M&A, equity capital markets for Germany. So we would like to start with a quick survey in order to check whether you, the audience, have already heard about ESG share buybacks. And I would like to ask, there we have it. So if you please click on whether you have already heard about ESG share buybacks, a yes or a no if you haven't heard about it. So this would give us an overview if people are already familiar. So you have 20 seconds from now to vote. Thanks. I remember in the past when we had these physical conferences, we had always a chance to listen to music. Now we do not have music, but we have the result. So actually only 5% have heard about this, 95% haven't. So this is of course great. So there is a lot to learn for you in this afternoon. So yeah, we will go straight into the topic, and I would like to ask Bénédicte to share the 5 key points on impact share buyback.
Thank you very much, Silke. I think, it's quite simple. The ESG share buyback allows companies to adopt a more inclusive approach, taking into account all their stakeholders. Share buybacks are usually dedicated to shareholders only. The ESG share buyback is dedicated to all the stakeholders. So, how does it work? The outperformance of a share buyback, which is usually for the company, can be allocated to the funding of an ESG project, which is consistent with the ESG strategy. BNP Paribas is the first bank in Europe to have developed ESG share buyback in partnership with the BNP Paribas Exane. I'm not sure, how familiar you are with the different share buyback structures, and maybe Carsten will be able to explain to you at the end of the workshop the different available structures. But to make it simple, the ESG share buyback involves a share buyback guaranteed discount or outperformance sharing structure. And the idea, once again, is to suggest that companies allocate part or all of the guaranteed discount of the outperformance to the financing of an ESG project. So let's keep it simple and take an example. Let's say that you have a 200 million euros share buyback to execute, and that the bank guaranteed 100 basis point discount. Then in this case, you will be guaranteed a 2 million outperformance that you can allocate in total or partially to the funding of the ESG project. I have maybe two last key messages for you. The first one is that the ESG share buyback is very flexible. It's flexible in terms of a percentage of a discount, which is allocated to the ESG project. It could be 100% of a outperformance. It could be 80%, 70%. And it is also flexible in terms of a selection of the ESG project that you will fund with the outperformance. Keep in mind one thing is that the longer the share buyback is, the more flexibility we have to reach the guaranteed discount and even beat the guaranteed discount. And the last thing is that maybe some of you have already experienced a summer share buyback. The ESG share buyback is not more difficult to execute and to set up than a classical share buyback. Sophie will be able to explain to you how she sold internally the ESG share buyback and how she managed to leverage internally and externally the share buyback and the kind of a feedback that she collected from the different stakeholders. I would only like to add one thing, is that when we launched this ESG share buyback initiative, we carried out a survey with institutional investors in the UK, in the US, in Germany, in France, just to get their feedback about this initiative. And they all welcomed very warmly this initiative and told us that it's a top initiative, and to be really good, the ESG project is to be very well identified and consistent with the ESG strategy. One last thing is that, when you look at the ESG share buyback, actually as a corporate, you don't take any risk because the guaranteed discount is guaranteed by the bank, or if you share the outperformance, it's the outperformance that will be executed. So there is no risk for the company, only some upside. Thank you, Silke.
Thank you, Bénédicte. Before we come to the core of today's panel and listening to Sophie and her experience on impact share buyback, I would like to start the second survey of this afternoon. And ask the technique to open it. The question is, how important are ESG topics for your company? And it would be great if you could give us your view if it's important or whether it's not so important for you. Has it a priority or rather not a priority? Thank you very much in advance. Okay, we have the result. Okay, we have very important, 38%, getting more and more important, 41%. It's a topic for us yet, but not the highest priority, 18, and not important, 3. Of course, probably we are in the ESG stream. Perhaps this is a little bit biased, but in the end, I think this is what we are also hearing from our day-to-day conversation with corporates. It's already very important, or it's even getting more and more important. This is also what the audience says today. And with this, I would like to ask the first questions to Sophie, because I assume ESG topics are very important for BIC, but now we would like to hear from you a big background on the ESG share buyback project, and perhaps you can explain a little bit to us and to the audience the origin for BIC.
Okay, so thank you, Silke. So I think there are two components with ESG share buyback. The first component is buyback, and the other one is ESG. So very quickly on the buyback, in November 2020, BIC launched a transformation plan with different pillars, and one of them was evolving our use of cash policy and adding a specific regular share buyback pillar to the use of cash policy. Now, that said, when you say it, it is always very challenging to bring visibility to share buyback. We used to have share buyback at BIC. We used to buy our shares on a regular basis on the market, but without any specific program or a structured program. So the decision was taken back in November to go now through more structured share buyback in order to give more visibility to this use of cash policy pillar. So the other one, the ESG part, it's fair to say that I first heard of it during one of Exane BNP Paribas conference. I think, and Bénédicte might correct me, I think it was during autumn 2020 when she presented the project that she had of this structured ESG and impact share buyback program in partnership with JPAL. And when I discovered that program, I immediately thought that it was exactly what we would need at BIC to, first of all, bring visibility to the share buyback, but also embed that share buyback into a wider ESG policy. So the origin comes from this conference, this Exane conference. And then we can follow up with what happened. In fact, it's very funny. I forwarded the flyer to my CEO and my CFO, and I wasn't expecting anything. In fact, it's just by the way, I think it's interesting. Do you think we could think about it? And I immediately received an answer from my CEO who said, get ready to present it to the board. So that means that he immediately embraced the project and asked me to prepare something to present to the board. And that's what I did. Then we presented it, I think it was in December 2020 or something like that, to the board with this ESG component of the share buyback.
Thank you very much, Sophie. Could you tell us how was the project received by the board, and maybe explain to the attendees the ESG component of a share buyback for BIC?
Yes, with pleasure. So just maybe to start with what I presented, it is important to understand that the presentation was a comprehensive presentation of the share buyback, the ESG component, and within the ESG component, a proposal of who might be the beneficiary of the program. So we presented it once again, a comprehensive view of the program, which is for me very important. So that since the beginning, you as investor relation or whoever we carry the program internally, you have a holistic view of what you want to do and specifically who you want to affect the money, the fund to. So we at BIC, we have a foundation for education, a corporate foundation for education. And although I was extremely interested in supporting JPAL, we thought, and it was in agreement with my CEO, that it was also important that internally we could support also the foundation. So what we presented to the board is a mix of supporting an external stakeholder, which is in our case, JPAL, and an internal one, the big foundation. So that is key. And I have to say that the enthusiasm of the board was at the level of the enthusiasm of the CEO. It really immediately spoke to the board. We have a very an old and strong ESG culture at BIC. Our environmental sustainable development program started 20 years ago, so you see that it's really embedded within our culture, but it was bringing something different. And I guess the board immediately understood the benefit of having something that was not skewed towards shareholders, but toward other stakeholders. And the first feedback that I had from board was it really makes sense, and it will bring sense to the board, to the share buyback, which is usually something that people don't understand. What is it for? How do you create value with a share buyback? You need to be a high-level graduate in finance to really understand what's a share buyback and what it means in terms of shareholder remuneration. So strong enthusiasm from the board, again with a comprehensive presentation since the beginning of all the different steps.
And how does this ESG share buyback fit into your ESG financial strategy?
So it's totally embedded in it, because the choice that we've made by supporting JPAL and the big foundation is fully consistent with one of our ESG strategy, which is education. And I think this is very important, even for investors. And Bénédicte, you covered it a little bit during your introduction. I think it is important that the ESG component of the share buyback or the impact share buyback being fully consistent with the company ESG strategy. Otherwise, you might be accused or blamed for greenwashing. So if the ESG component of the share buyback is consistent with your global ESG strategy, then it will be for sure very welcome from all the different stakeholders, should it be media or employees or investors. And this is what we've done with JPAL, making sure that the project that we are supporting makes sense and are consistent with our ESG strategy.
Thank you, Sophie. So, I can see Mr. Diegelmann. This means something.
One question popping up here, which I would like to address to Sophie at this point of time. The question is, what is the main benefit for BIC to align your share buyback program to this specific ESG component?
Yeah. So first, as I mentioned, it brings visibility and meaning to share buyback. Something internally, when you speak about share buyback internally, for example, that doesn't mean anything for our team members. Bringing that ESG component help us to explain why we're doing share buyback. So that is very important. It brings visibility. Investors, it's the same, once again, going back to the consistency between the ESG pillar and our ESG strategy. But it brings a lot of visibility, and it makes things more easy when you want to explain why you are buying back your share.
Thank you.
Okay, next question from my side. So I think it could be interesting for the audience to listen how the project was carried out internally, the various departments that were involved, and perhaps you can describe it a bit more from this kind of administrative and technical point of view.
So there were three departments, four in fact departments involved. So my department, corporate stakeholder engagement. Then I work closely with the treasurer. That is key to make sure that we sign the contract, the relationship with Exane BNP. So To make it simple, all the technical part was handled by our treasury, and it was also very exciting for him to do something more, to do something different than he were doing initially. So that was great. The relationship with the ESG component, so JPAL and the big foundation, carried out by my department and the group communications department, and of course we also involve the legal department and our colleagues from our lawyers to make sure that we to help us build also the contract. So and that is of course outside the CEO. In addition, you have the CEO and the CFO who are not involved on a day-to-day basis, but very interested, and they really follow up our roadmap and how we built the program.
Thank you. And I think it's really important that also from a strategic point of view, as you said, the CEO and the CFO, of course, not on a day-to-day basis, but generally are really committed and supportive and definitely involved. But there are, of course, not only internal stakeholders, there are external as well, and we are talking in front of the IR community. So the question is, of course, how has this impact share buyback been received by your investors, or generally speaking, by investors, by analysts? And perhaps it's also interesting to hear what the ESG rating agencies have thought about it.
So it's fair to say that I didn't have many feedback from the rating agencies. I guess it's due to their process, that they're very organized, all the questionnaires. So never got specific feedback. It was stated in some of the different rating, which is good. But it wouldn't be honest for me to say that it brings something. It is in addition to everything, but they do not include that in the rating, at least until now. Investors were the one that I spoke with pretty enthusiastic. They're appreciating the consistency between our sustainable development program and the ESG component of the program. We had strong positive feedback from media. Financial media or media specialists in ESG, and I follow it. So we launched our first ESG Impact Share Buyback a year ago, and we had a follow-up with them. Now we didn't have the front page of the Financial Times, but we were covered by the Dow Jones, for example, which is quite unusual for us. So it means that it was interesting, maybe because we were the first. But at the end, we had interest. We got interest from everybody, and I must admit, I had never had any negative feedback from any external stakeholder.
So this is definitely good, and if you even got positive feedback, the better. Talking. I see Mr. Diegelmann is back. We can't hear you. We can only see you. We still can't hear you.
Sorry. There are a couple of questions coming in which may fit right in here. So number one is, how much of your time did it absorb to introduce such a program? And the second question is, how high were the costs for BIC to introduce such a program?
So it's not time consuming. So it's first it's a teamwork with the treasurer. It's quite a simple contract. It's simple from our side. It was made with BNP, so we were supported by BNP Paribas teams. So it's absolutely not time consuming, at least to build a program. Then it can be a little bit more time consuming to publicize the program and communicate about that, but that's my job. So that's part of the job. So it's not in addition to anything. Now the cost by itself, and maybe Bénédicte can help me on that. There's no specific cost. We have a X million euro for it. On our side, it was a 40 million euro share buyback program, and we there are no specific cost linked to the program. Bénédicte, can you correct me if I'm wrong?
No, you are absolutely right, because the discount is guaranteed by the bank. So, depending on the market volatility, if we don't achieve the guaranteed discount, then the bank will pay in order to reach the guaranteed discount. And if we achieve the guaranteed discount, then we achieve it. But BIC does not pay anything, in addition to the market price of the shares and the VWAP. So no cost related to this ESG component.
And if I may, it's all very transparent and clear since the beginning. Since day one, you know exactly what you are going to invest into the buyback, because you know the discount and you know everything. So no, there is no specific.
Yeah, absolutely. There are two types of structures which are ESG friendly. There is the guaranteed discount, which is the one that was chosen by a BIC. And as Sophie was saying, the discount at the start of a program. So you can already decide how much you will allocate to the funding of the ESG project from day one of a share buyback. And the second type of structures, which is ESG friendly, is the average VWAP with outperformance sharing. But the outperformance of a share buyback is not only at the end of a program. So meaning that you know how much you can allocate to the funding of the ESG project only at the end of a share buyback. That's the main differences between the two structures. The best effort structure, but I suppose that Carsten will mention it at the end of the workshop, is not ESG friendly. There are only two types of structures: guaranteed discount and average VWAP with outperformance sharing.
So there's more questions coming up, and it may make sense to ask them here, Silke, if that's okay. So number
Absolutely.
One is, which is probably more toward the bank, isn't the share buyback program in general just a tool to make CEOs rich?
This is probably a question to Carsten as our expert in general for share buybacks. Carsten, you're mute.
Yeah, just unmuted myself. I hope you can hear me now.
Yes.
No, it's a no. I think the purpose of the buyback in the first instance is probably can be twofold. So either the purpose is to pay out excess cash to shareholders in addition to a dividend, or maybe the company has sold a large asset and decides between a special dividend or a larger share buyback. Or there could be a purpose where the shares could be later used in order to reduce dilution under a employee share option program, or maybe another dilutive instrument, a convertible bond or bond plus warrants. So in that sense, I think the answer can be yes. So if the treasury shares are later being used to allocate those shares to top management, then it's a way to compensate management.
Okay. And there's another question is here, is there a possibility that investors can choose between different options for which ESG project the money is spent?
I think no. I think the selection of the ESG project is very much in the corporate hands. And as Sophie was saying, one of the key success factors of this initiative is that it is consistent with the company ESG strategy. And for BIC, it's very much focused on the education, but for some other corporates, it could be focused on diversity, or it could be focused on the VE. So it's very much something which is related to each company.
And another question in relation to that is, could you please explain how the outperformance of the share buyback is actually achieved?
Carsten, would you like to take this one? Or
yeah, I can happy to take this one. So the outperformance of the share buyback is, as Bénédicte has explained, due to the fact that the bank receives a certain flexibility when executing the buyback. As you may know, most of the on-market share buybacks are executed under the safe harbor of the market abuse regulation, which means under certain conditions, one of which is that the issuer enters into a fully independently managed buyback by the bank. So by definition, that means that upfront, before the execution starts, the issuer sets the parameters, but while the execution is ongoing, those parameters may not be changed, of course, with the exception that if it's necessary, one can, of course, terminate the buyback. But otherwise, there's no intervention by the issuer in terms of taking any trading decision, including timing. Now, those buybacks are typically, so one parameter is, of course, the size of the buyback, and that parameter is the euro notional rather than the number of shares. So the bank receives a mandate to achieve that euro notional, but during the execution period, the bank is basically flexible in terms of when those shares are exactly bought. So it could buy more shares on the way down. So when the stock has a weaker development, and then buy less shares on the way up. And through this activity, it's very similar to hedging an option, by the way, a derivative. So through this activity, value can be created. And this value is then translated into this discount that the issuer receives upfront. The discount is therefore dependent on a couple of factors. So one is the length of the buyback. So in option terms, there's more time value in this buyback program. It also depends on the timing flexibility that the bank receives. So typically, one would agree a minimum execution period and a maximum execution period, and the bank can then decide when to exactly terminate or complete the buyback in between those two dates. And there could be also variability in terms of the actual size of the buyback. So sometimes buyback programs are announced in huge size and then executed in several sequential tranches. So the issuer could think of the first tranche, for example, to be between, let's say, 200 and 250 million. And this flexibility is also increasing the discount. However, of course, there's no certainty where you will end up in between 200 and 250 million. But basically, these are the factors that are driving the discount. And of course, volatility of the share price. So when you have stocks with high volatility in the, say, the 30s or 40s, then that translates into a higher discount than low vol stocks with, say, 20 volatility.
Thank you, and over to you, Silke.
Thank you,
Sophie, I have one question for you. What would be your recommendations for corporates who are considering such a project in 2022, and what are the mistakes not to make? You have experience with the ESG share buyback for a bit more than 1 year, so your feedback is very valuable.
Okay, so I would say, first of all, you need to find a sponsor within the company. So better if it is the CEO, but at least the CFO. It's something that you can't handle alone. And you need, at least for me, once again, it's a sponsor. You need someone that support the project. So that's very helpful, and that happened with me. I had really the full support of the CEO, and that was great because every step were easier. The second one is, as I mentioned, it's a teamwork, and you need to make sure that you partner with the treasurer. Legal is also important, but I think it is very, very important that you partner with the treasurer, because the treasurer is the one who, at least in our organization, but I suppose this is the case in many organizations, is the one who is in charge of the relationship with the bank, and then has also a high technical expertise in terms of all those kind of structured program. So this is very important. But on top of everything, and I mentioned it, and Bénédicte, you said it already, I think it is really important that a project is aligned and fully consistent with the the company's culture, the company's ESG, sustainable development program. It cannot come from anywhere on top of everything. It has to be really something that makes sense, because it's important then to explain that internally and even externally. So it's key that your ESG share buyback is aligned with your purpose or your ESG. If you don't have any a very structured sustainable development program, it has to fit with your culture or your purpose or your company. It cannot be something that just sticked on the program like that. So those would be and it's it's the mistake not to do. It's I would say the plus and the minus. So this would be for me the most important thing.
Thank you very much. So Silke, if I may, maybe one last question. So Sophie, you launched the second tranche of your ESG share buyback a couple of days ago. What are the next steps for BIC?
Well, first achieve this one. Make sure that so to your point, and that's also very interesting. So we announced the launch of the second ESG share buyback program, which is in terms of ESG component consistent with the first one, which is we continue to partner with JPAL and the BIC Foundation. So once again, consistency of the program. And for us, now that the program is launched, and so maybe one point I would say is that this time the decision came from the top, which means that the board, when they reviewed their use of cash and everything, they decided, they proposed by themselves to renew the program. So that's also interesting. It came from the top this time and not from the bottom.
Thank you. Sorry, go ahead.
Yes, and the next step will be to continue to work with JPAL and the foundation for once again to ensure that we have the consistency of this second program versus the first program.
Thank you very much, Sophie. Thanks for your feedback. At BNP Paribas, we were very proud to execute this first ESG share buyback with such a great company as BIC and with yourself. If I summarize what we said during this workshop, and if we had to remember a couple of key ideas around this ESG share buyback, I think that what is important is to say that the ESG share buyback is simple to implement. It's simple to explain internally and externally to the different stakeholders. It's concrete and it's flexible. It's flexible regarding the selection of the ESG project and the percentage of the outperformance that you will allocate to the funding of the ESG project. That's maybe the key messages that we wanted to convey today about the ESG share buyback. Silke, the floor is yours.
Thank you very much for this good summary, Bénédicte. But before we come to the final question round, I would rather ask a couple of questions to Carsten. But before we start with this, we have a last survey for this afternoon. I would ask the technique again to show this up. It's about share buybacks in general, and you would love to understand how familiar you are with share buybacks in general. So are you already familiar, or have you not worked on this topic and spent too much time on this topic in the past? Thank you very much in advance for your vote. Okay, so we have roughly two-thirds who are already familiar, one-third that is not so familiar. So I think for the one-third, it definitely makes sense to spend a bit of time on this topic in general. For the others, perhaps there's also something new to learn. So, Carsten, I would like to start with a question we touched already quickly, but a bit more in depth. So the question, dividends versus share buyback, and it would be great if you could explain the decision criteria for the one or the other.
Yeah, sure. So, so I think generally speaking, it's not really a question of dividend or buyback. So it's more a question: do you want to do a buyback, and what is the purpose for the buyback? And the reason I say this is, I mean, if you are an income or value stock, you probably have a dividend policy anyway that you do not want to change. So your policy, for example, says paying out 35% of net income per annum, and then as the company grows, the dividend grows, and the buyback then comes on top of it if the company produces excess liquidity. And typically, in that, it's a temporary effect, right? So maybe you've sold an asset or you had an extraordinarily good year, and then you choose the buyback because it's more flexible, right? So when you pay a dividend, the cash is gone. And if you if you top up your dividend with a buyback, that buyback is being typically executed over a longer period of time, maybe a year or maybe several years. And then you can also, suspend it or terminate it actually if another or better use of the cash arises, maybe M&A or so. So it's not really a question and then the purpose of the buyback, in addition to whether you want to use it in the context of your ESG initiatives, I think, clearly, I think most, if it's excess cash, then most companies would then later on cancel the shares. But in some cases, there's also a dilution management related to that. So, for example, a growth company that is actually short on cash uses their own stocks initially, so maybe a couple of years ago, to issue stock options to their employees, and then later on, in order to mitigate the dilution, the treasury shares are being purchased in order to service those options.
Thank you. And perhaps another question, Bénédicte already touched. We have Michael Diegelmann again.
One question to the bank. And it is probably for Carsten here. What is the role of the bank when it comes to judging on the ESG component?
So I'm happy to take this one. The bank has nothing to do with the selection of the ESG project. I think that what is important is that this ESG project is consistent with a company ESG strategy. So for some companies, it could be focused on the E. For some companies, it could be focused on the S. Some companies, I speak, could have a foundation. But the ESG component is completely independent to the bank. It's completely in the company's hands.
Thank you.
Now I'm unmuted again, I think. Carsten, another question. Bénédicte already touched quickly on the different structures or types that do exist for share buybacks in the context of what is possible with impact share buybacks. I think it would be interesting for the audience, just in general, not only related to the impact share buybacks, to understand more about the different structures and the advantages and disadvantages of each.
Yeah. So as people will know, of course, it starts with a resolution that is valid for 5 years on Vorratsbeschluss at the AGM. And what you typically put into that resolution is at least 2 things. One is that you can repurchase shares on the market, so on the stock exchange or regulated MTFs. And that you could launch a tender offer for the shares. And the latter is, of course, a scenario where you maybe have a company with a smaller market cap, i.e. a smaller liquidity, and they want to repurchase up to 10%. So the max they can go to in a very short time frame, maybe because they sold an asset and they want to return the cash. I think only in those scenarios you would then see a tender offer. There's also a third sort of sub-authority possible that would allow derivatives, the use of derivatives, so the purchase of a call option, the sale of a put option. In the first case, the issuer would have to pay a premium and then can thereby hedge the upside, so you lock in a potentially lower purchase price if you're in an up market, or you sell the put option in order to receive a premium. I think those structures only should complement an on-market repurchase program, because they're contingent on the share price, and you do not know whether it will come to an exercise or an exercise of those options. Lately, we haven't seen a lot of that, but a couple of years ago, large companies, DAX companies, also tech MDAX companies have been active in those strategies, and also quite successfully. Now, the most common structure is the on-market buyback, and we've seen a clear trend towards the so-called guaranteed discounted VWAP or VWAP minus structures, which we are discussing on this webinar, because the discount is, or the value of the buyback that's reflected in the discount is then being used and deployed to an ESG project. Of course, that can be executed also under a best efforts mandate. And we, as a long-standing broker, we are also happy to, of course, execute those buybacks. They're rather simple in the sense that you give a mandate. Maybe you have some thresholds in terms of shares, notional or prices, or price ranges within the buyback should be executed, and then there's a pure execution fee. One can, of course, also target the VWAP or the average VWAP, but the achievement of that is then not guaranteed.
Thank you. So are there any more questions from the audience, Michael?
I think we had a lot of questions during the call, so all our people are happy right now. And I think we had a very active and lively conversation. Thank you for that. Yeah.
Thank you. So we would like to thank you, of course, Cometes IR Club, for having us this afternoon, and to the audience. So if you have individual questions, or if you would love to understand this better, have a discussion with one of the panelists, wherever, please feel free to reach out. You'll find at least my contact details on the IR22 website, and of course you find all of us on LinkedIn, so please feel free to reach out whenever you would like to have a discussion on these topics and others, of course, as well. And yeah, thank you very much for listening to our panel this afternoon. I would look very much forward to meet with you in person next year, perhaps in a physical event or virtually again. We will see, but in the course of the year, hopefully someone in person. Thanks to everybody attending, and thanks to the organizers.
Perfect. And before everybody's leaving, can I ask the back office to have the final question here, to give us some feedback? Thanks, Silke. Thanks, everybody from BNP and BIC, and have a wonderful rest of the evening.
Thank you very much. Same to you.
Thank you very much. Bye-bye.